Let's break down what it means to own a stock. When you buy a share, you become a part owner of that company, like owning a slice of an apple orchard. After the orchard pays its bills and invests for the future, it can share leftover apples with you. In the stock market, those apples are called dividends. A dividend is your share of the company's profits, paid to you just for holding the stock. It's the simplest reward for being an owner, like collecting rent as a landlord. This isn't money from selling your stock, it's passive income, the foundation of financial security. Not all companies pay dividends. Fast-growing tech firms often reinvest profits to fuel expansion. Mature companies, think utilities or consumer goods, often pay dividends because they have more cash than they need to grow. When a company pays a dividend, it's signaling financial strength and stability. These are often industry giants focused on steady performance and rewarding shareholders. A long history of paying and increasing dividends is a sign of resilience. It's a powerful signal you shouldn't ignore. Dividends are a direct way to share in a company's success. They're not complicated, just a steady stream of cash for being an owner. That's your slice of the corporate pie. Why do companies pay dividends instead of keeping all their profits? Simple to attract and keep investors. A steady dividend makes a stock more appealing, especially for those seeking reliable income. The board of directors only declares a dividend if they're confident in the company's future. Cutting a dividend is a red flag and usually tanks the stock price. Paying dividends forces management to be disciplined with cash, focusing on real profits. That's why you see dividends from stable, predictable businesses, like utilities or consumer staples. These companies know their earnings and can commit to regular payments. Dividends are a sign of strength and a promise to shareholders. It's how companies show confidence in their future. The biggest benefit of dividend stocks? Reliable income. Dividends keep coming no matter what the market does. This steady cash flow is a safety net, especially in tough times. But the real magic is compounding. Reinvest your dividends, buy more shares and watch your income snowball. Over time, this can turn a small investment into real wealth. Dividend stocks also help fight inflation. Many top companies raise their payouts faster than prices rise. That means your income grows, protecting your purchasing power. High-quality dividend stocks are often less volatile, providing stability when markets swing. During downturns, dividends cushion the blow and can attract new investors. The result? More peace of mind and a stronger financial foundation. Dividends aren't just income, they're a tool for building lasting wealth. Reinvest, stay patient, and let compounding work for you. That's how you build your financial fortress. Dividend stocks aren't risk-free. The biggest danger? A dividend cut. Companies can stop payments if profits drop or debt rises. When that happens, you lose income and the stock price usually plunges. Another, risk-limited growth. High dividend companies may have less money to reinvest, so don't expect explosive gains. Rising interest rates can also hurt dividend stocks as safer investments become more attractive. Taxes matter too. Dividends in taxable accounts are taxed, which can eat into returns. Many investors use tax-advantaged accounts like Roth IRAs to avoid this. Know your goals and risk tolerance before investing. Understand the trade-offs, steady income versus growth potential. Be smart about where and how you own dividend stocks. There's no one-size-fits-all approach to dividend investing. If you need income now, focus on companies with high, stable dividends, think utilities or consumer staples. For long-term growth, look for companies that consistently raise their dividends even if the yield is lower. The total return strategy balances income with stock price growth. Owning companies like Apple or Microsoft. Diversification is key. Mix dividend stocks from different sectors for stability. Reinvesting dividends, using a DRIP, supercharges compounding and builds wealth automatically. Match your strategy to your age and goals and risk tolerance. Don't put all your eggs in one basket. Dividends can be a core part of any portfolio. Choose the approach that fits your financial journey. Ready to start? Don't just chase the highest yield. A sky-high dividend can signal trouble, a yield trap. Instead, look for quality companies with strong brands, competitive advantages, and a history of paying and raising dividends. Check the payout ratio, ideally below 70%, to ensure the dividend is sustainable. Review the company's debt and cash flow. Too much debt is a red flag. Start with dividend aristocrats or dividend kings, companies with decades of reliable payments. Use your brokerage's research tools to dig into the numbers. Begin small, buy a few shares or even fractional shares. Watch your dividends come in and reinvest them. Learn as you go. Patience and discipline are key. Dividend investing isn't a get-rich-quick scheme, but it's a proven path to financial security. Build your knowledge, grow your confidence, and let your money work for you. Start your journey to financial freedom today.